The Aussie's vaccine jolt higher has run into resistance around 73 cents this week. Global equities are pausing for breath too, caught in a tug of war between medium-term vaccine optimism and tightening restrictions to curb COVID case spikes. In recent days, NYC schools were shuttered, California and Illinois reinstituted mitigation plans, Ohio imposed a statewide curfew, and Tokyo raised their virus alert level to its highest levels. But many currencies are still forging ahead, and the Aussie dollar has slipped to the bottom half of the G10 tables, ceding its usual outperformance position when the US dollar is broadly on the back foot. Kiwi is one good example. It's currently the darling of FX markets and looks set for a push towards 70 cents soon, boosted by last week's hawkish surprise from the Reserve Bank of New Zealand. They scaled back easing plans amid a surging local housing market, and markets have now given up on expectations for negative rates there. The pound's another currency. It's been pushing higher this week too, as Brexit angst eases on hopes for an imminent deal with the EU, while the yuan hit its strongest levels against the US dollar in nearly 2.5 years midweek. So what's capping the Aussie dollar? Well, the RBA's stepped up pace of asset purchases may be one background factor. Other headwinds include China's intensifying threats to Australian exports, even as both nations signed the RCEP Free Trade Agreement. Yet the Bloomberg Commodity Index is holding near highs since March, and iron ore is at a 2-month high above $125 a tonne as well. China's early control of COVID is helping cement a recovery that is continuing to gather pace. Industrial production grew 6.9% in October in annual terms, the third consecutive stronger than expected reading. So the Aussie dollar's commodity fundamentals remain in very good shape. Australia's coronavirus picture remains very positive too, even with South Australia's likely brief lockdown in response to a small number of cases there. Victoria is opening up, and encouragingly, jobs were already recovering in October, helping drive a stunning 179,000 jobs gain rather than the expected 30k decline. The US dollar is likely to break down to fresh lows at some point. US rebound momentum was already faltering and will surely slow further following the latest patchwork of local efforts to contain the virus spread. That, and reduced hopes for a large-scale fiscal stimulus that would have come with a blue wave US election outcome, should see the Fed deliver a strong dovish message at their mid-December meeting. So while the Aussie dollar looks capped for the time being, the underlying picture remains very positive. China's recovery and a dovish Fed should sustain Aussie dollar gains into 2021. There's a decent amount of data next week, including preliminary October retail sales, November business surveys, and Q3 construction and capex figures. We'll speak again next week.